Today on the Blockchain Report, Bitcoin's just shy of 118K. Maybe it's because the FBI just seized 20 Bitcoin from a ransomware gang. Because why buy Bitcoin when you can just take it? Willy Woo just sold all his Bitcoin to chase 1000x startup moonshots. And the US-China trade truce hit snooze again, giving markets 90 days to pretend that everything is totally fine. All that and more right now on today's show. Let's go! Good morning and happy tidings, my Bitcoin believers and crypto contrarians. Welcome back. I'm Hank Hudson, broadcasting live from San Francisco, where rent's unaffordable, the roads are philosophical, and coffee is treated with more reverence than most religions. It's Tuesday. TradFi is rubbing the sleep out of its eyes. Crypto Twitter's deep in a thread war about macro liquidity, and Bitcoin? Well, Bitcoin's pacing like a junkyard dog with laser eyes, just waiting for the next institution to fumble in with a $1 billion buy order and zero clue as to how wallets work. Now, before we plunge into the digital chaos that passes for financial news, smash that like button like the SEC smashes ETF applications, and follow RoxomTV and me at Hank at RoxomTV on whatever platform has it rugged, rebranded, or turned into a tokenized OnlyFans clone. Now, whether you're tuning in from a co-working space, a hardware wallet startup, or your cousin's garage where you swear you're building the next Bitwise, welcome. And before we get into the news, let's first take a look under the hood in this morning's market rundown. Let's go. All right, it's Tuesday and things are looking... Nothing a lot going on right now. Bitcoin currently hovering right below 118K. Ethereum right below that 3,800 mark. We haven't seen a lot of movement there. Maybe this week will be different. Who knows? Next up, I got XRP at 310. Cardano at about 78 cents a pop. And Dogecoin just twiddling its thumbs right around 22 cents a coin. In TradFi, things are looking a little red, but nothing crazy. Right now, the Dow Jones is sitting about 44,700 arena, not a lot happening there. Same can be said for the NASDAQ, right around 21,160. The S&P, also the same, right around that $6,300, $6,400 mark. Not a lot going on. Individually, more of the same. MicroStrategy's down about 3.5 points this morning. Coinbase down about 6 or 7. Tesla's down nearly 4.5. NVIDIA standing pretty still at 176, 177 a share, and GameStop doing a whole lot of nothing at $22.84 a pop. We got a lot to cover today. Let's go right to the bull run on camera one. Por favor, that's Spanish for do it now. Let's get to camera one. We got a lot to talk about here. As much as I liked my side profile, let's go to that front one here, guys. There we go. Okay. All right, let's get into it with this morning's bull run. We got a lot of top stories to cover and only so much time. Let's do it. First up, Bitcoin is up, in case you haven't noticed, and tariffs are paused. And for the first time in what feels like forever, the US and China are pretending to play nice. Washington and Beijing have agreed to extend their tariff truce by another 90 days. The market reacted like it had been holding its breath since 2018. Bitcoin traders immediately started targeting 120K because, obviously, talks are now resuming in Stockholm. This round builds on previous meetings in Geneva and London, where negotiators argued about tech rules, digital services, and forced know-how transfers. Classic trade war stuff all around. Business leaders have frozen major moves, waiting to see if this truce becomes an actual resolution or just more diplomatic theater. Early signs out of Beijing suggest that they're willing to talk, which makes sense considering their economy is wheezing. Last round, tariffs jumped to 25% on stuff like soybeans and semiconductors. Now, both sides are pretending this temporary pause could lead to something actually productive. Sure. And the IRS, well, is customer friendly. In a new twist, we got to talk about fentanyl. China wants the U.S. to lift tariffs on precursor chemicals used to manufacture opioids. They claim the duties make it harder to track illegal shipments. The U.S. says Chinese suppliers are literally fueling a domestic overdose crisis. So yeah, smooth negotiations ahead for sure. Washington slapped extra tariffs on chemical imports in retaliation. Now China wants cooperation. We're talking lab data, law enforcement tips instead of tax warfare. Meanwhile, the political pressure in D.C. is intense. Drugs, trade, election season, no easy wins. But, let's get back to the BTC. The price jumped to $119,380 after the news. Its current price is sitting a little bit below, right now at about $117, $118. We saw a bit of a decline since its all-time highs we saw about 2 weeks ago of $123. And this all sounds very impressive until the next headline ends up derailing everything. Analysts are warning not to read too much into it just yet. Low volume, unpredictable swings, and macro drama still rule this crypto market. And it's going to be like that, it seems like, for a little bit. All right, well, joining us in the studio today, we got one of my good friends of the program, Anton from Xapo Bank, to go over some stories with us. Anton, how are you this morning? It's great to see you on this Tuesday.
Hank, I'm excited to be back, and see, I'm wearing my Bitcoin hat because today is going to be all about Bitcoin.
Oh, I love it. You came prepared with props. Anton, you are a man after my own heart. All right, Anton, I'm going to read this story quick. We're going to bring you back, and I can't wait to talk about it. Sound good?
Yes.
Rock and roll. Okay, first, crypto veterans everywhere are sweating, not because of the price. Actually, it's because of Google. Searches for buy Bitcoin are spiking again, and if you believe in the grandma rule, it's officially time to worry. And in case you weren't aware of it, the grandma rule is actually quite simple. When your grandmother asks you how to buy Bitcoin, the top is it. It's the crypto version of the shoeshine boy giving stock tips before the 1929 crash. And according to Reddit, the OGs are seeing red flags. But here's the problem. The signal might be broken on this one. Because even though Google Trends shows spikes in altcoins and alt season and institutions, not grandmas are moving this market. It's not. It's the institutions. Bitwise says retail isn't the driver of this cycle. Those institutions are. And institutions don't Google how to buy Bitcoin. They deploy capital through treasury desks, OTC desks, and Cayman Island LLCs with 5 lawyers on speed dial. In fact, App Store rankings are now considered more reliable than Google Trends. Retail might be searching, but they're not buying. River estimates that an individual investor sold nearly 247,000 Bitcoin in 2025. That's $23 billion in BTC gone. Meanwhile, businesses, led by Strategy, of course, acquired 157,000 Bitcoin. Strategy alone bought 77% of that. And public companies in total bought 196,207 BTC just this year, more than the 164,000 Bitcoin the network has even produced. So just sit here for a second, let that sink in. The buyers are absorbing more Bitcoin than that which exists. So the Google spike, maybe it's a false alarm, maybe it's nostalgia, or maybe the old metrics just don't work anymore. This isn't 2017, it's not even 2021. This is Wall Street's bull run. The grandmas are Googling, but the institutions are buying everything before she even clicks the first link. All right, we're bringing in Anton. Anton, we're seeing a big spike in Google searches for buy Bitcoin, but retail really isn't part of it. Are we just seeing curiosity with no follow-through, or is something deeper going on here with retail?
Hank, what I can tell you is that almost no one is using Google anymore. I don't know if you know, but 75% of Google searches are down in the past 12 months. Everyone is using ChatGPT, Grok, or any AI tool to search and explore the market. What I'm seeing is happening right now. We have institutions, and they're not going to go and search how to buy Bitcoin. They're just going and executing. And the type of drivers of this bull run is completely different. But I think this is great for the Bitcoin because think about the new retail that is entering the market. Usually they're typing how to buy Bitcoin. They're buying some Bitcoin, and then during the first drawdown, they're panicking and they're selling moving the price even lower. Right now, you have institutions, and they're not going to sell if the Bitcoin price decreases to 30% next week. They're going to hold, and they're here for the long game. Overall, the Bitcoin market is changing dramatically, and all type of models, historical patterns, even some quantitative models are completely broken. And when someone said to me, but see, the Bitcoin searches on Google are not where they were supposed to be. I'm saying, okay, now we have completely different environment. Bitcoin is not appreciating 100x per cycle; it's appreciating like 10x, and this is still great for everyone because Bitcoin already won. It was recognized from all of the major Wall Street financial institutions. It was recognized from the president of the US, United States, and no one can complain that Google searches are not spiking. And also, Hank, what I'm seeing is when the Bitcoin price reached 100,000, all of the major media outlets cover this. And even at this point in time, the Bitcoin searches on Google compared to the peak, they were like 60% down. And then what happened? We saw a negative correlation. Like people started uh, searching less and less for Bitcoin while the price reached 120. And this is unprecedented, and it's a very strong sign that retail is completely gone. But this is good for the Bitcoin price because the volatility is also going down, and more people will be now interested to invest some serious amounts in Bitcoin, not just to speculate, because like speculators are bringing very low value to the network.
Yeah, it definitely seems like institutional diamond hands are the primary drivers of this most recent market cycle. But it always begs the question, I've been asking this of a lot of people that have been on the show because I'd love to get different perspectives about it. Why do you think retail is absent for this one? Usually when Bitcoin reaches all-time highs, we see it in the news, legacy media like Google Trends, things like that, but they seem to be watching from the sideline. Do you feel like retail feels as if it's priced out right now? Is there a unit bias where people aren't necessarily understanding that you don't need to buy a whole Bitcoin, right? And it's still going to offer you better returns than most everything that's probably in, the traditional market. So what do you think is the reason retail's standing pat on this one and not joining in on the party?
I think it's going to take more time for retail to fully understand the value of the Bitcoin because let's think what happened during the last few cycles. In 2011, the first cycle, the price appreciated from approximately $2 to $1,200. And Hank, I remember sitting in my car and thinking, damn, I missed this one. Now Bitcoin is too expensive. And Bitcoin was pretty much everywhere from those early speculators. Then cycle 2, Bitcoin appreciated from approximately the low of $200 to 19,000. And this was 2018 when the masses started learning really about the Bitcoin. This was approximately 100x return for a period of 2 years. And then cycle 3, this was the last cycle where the Bitcoin reached from 3,000, I think during the COVID crash, to 69,000. And this was like 20x return. Still exciting, but not that exciting. And from that moment, we started seeing less and less retail, or at least I started seeing less and less interest from the retail. And again, those are just speculators. Those are people who are aiming to make a fast 100x and then exit. But those people are bringing very low value for the Bitcoin ecosystem. But because of the institutions and now because the Bitcoin has been more and more recognized, I think the real investors are going to understand the value of Bitcoin and buy Bitcoin because of the problems and the utility it's bringing instead of just buying and planning to sell few months from now. That's why I think this is super positive for the ecosystem. Like the fact that the retail is not here actually is not bad because you have now very high quality investors recognizing the Bitcoin value.
Yeah, I totally agree with you. It almost feels like Bitcoin is a victim of its own past successes because you have all these degen retail traders out there, I've been one of them in the past before, that are looking for these huge alpha plays. And even though Bitcoin, we are around 120-ish right now. If we're expecting it to go to $1 million in the next 5 or 10 years, that's still close to a 9 or a 10x, which in most traditional investments is incredible. I mean, they usually say, I think it takes, if you put your money in the S&P, it's about 7 years, assuming the S&P gains that normal 7 to 11% we generally see. And that has Bitcoin outperforming that in spades over a similar time period. But I think you're right. Retail degenerates are all looking for that big play, that 1000x. And we're kind of seeing that now a little bit. It feels like the little retail that is in the market might be kind of going into some of those altcoin plays right now. We're seeing Ethereum pick up some steam, Solana, XRP. So I think they're out there, but they're choosing to allocate their money into what they think are higher reward assets right now, even though I think you want to go for the high reward and also the safest bet, which Bitcoin is undoubtedly it right now. There's Bitcoin and there's everything else. And I think we're kind of seeing that play out. And to your point, retail, yes, such a more solid buyer of Bitcoin. They understand the ecosystem. They see where it's going. And I think in the long haul, that's going to be a big boon for Bitcoin's future successes. So I totally agree with you on that. And to my point, retail sold 247,000 BTC just this year, while institutions, especially strategy, of course, absorbed more than the network was even able to produce. So from a banking perspective, are you seeing that same trend where institutional buyers are crowding out retail because they see where Bitcoin's headed?
So Hank, what we're seeing on the Zappo Bank site is the clients, the members we have, those are OGs. Those people are not the speculators that didn't buy Bitcoin with the plan to sell a few months from now. So actually, our volumes are pretty much stable between buying and selling. Yes, we have some members that are selling, but also a lot of the OG members, because Zappo was established 2013. We have clients that have been with us for the past 12 years. Those people are never going to sell their Bitcoin. In the same time, we have a very strong interest from the institutions, and I think right now the 200,000 Bitcoins that you highlighted, they have been sold mainly from retail, which purchased them a few years ago. Those are not the early OGs. Those are customers that purchased after the 2018 bull market, and now this was their plan. Let's buy, and let's sell a few years from now, because they knew that historically a bull run is taking approximately, one cycle is taking approximately four years. But yeah, I mean, to your point, I think the OGs are not selling right now. This is mainly speculators, and I still can say there are very wealthy speculators that are offloading. But Hank, important point, you saw during the weekend, allegedly 80,000 Bitcoins have been transferred. There are a lot of comments if this was a real sell and someone just generated 9.6 billion in profit, which is one of the most profitable trades in the history of planet Earth, or it was just internal tax reasons transfer from one exchange to another. I mean, this still has to be clarified. But if we assume that there is approximately 50% chance that this was OTC deal, which was a real Bitcoin sell, the price of Bitcoin dropped with only $3,000, which is unbelievable. Now think about living in 2022 and someone selling 80,000 Bitcoins. If you remember the Luna, this crazy company, I think they sold approximately 80,000 Bitcoins and they crashed the entire market. We entered the bear market because of them. And now the price is moving with 3,000. I mean, if this is not a strong sign that there is a crazy demand, I don't know what else could be.
Yeah, I mean, it really speaks to the maturation of Bitcoin as a wealth-preserving asset. When, to your point, if we had seen that even a couple of years ago, immediate 20% drop, right? But we saw it go down to 115-ish, and then it clawed its way back in a matter of 24 to 48 hours, and we're right back to where we started, despite this huge supposed dump of Bitcoin on the open market. So yeah, I mean, I think it really speaks to this next phase of Bitcoin that we are currently seeing and living in right now, and it's very exciting. And according to the story, I think that the part that I thought was interesting is right now, App Store rankings are said to be more accurate signals than Google Trends. Do you guys at Zappo track things like that? And if so, what's your take on where the demand is actually coming from right now? Is it just institutions the whole way? I mean, do you guys track the apps and stuff like that? Maybe you should if you don't. I don't know. Is that something you guys do at Zappo?
Uh, the apps, yes, we are of course tracking the interest, and we see increased interest in downloading Zappo app. But those are mainly like Bitcoiners that already own Bitcoin. Like for new potential Bitcoin holders, I don't see a very strong demand right now, even though it has increased comparing with 1 year ago. But still, I cannot say confidently that we see a huge spike. I think the biggest demand for Bitcoin is not on App Store, or like we cannot use those metrics. What we are seeing right now is on-chain Bitcoin. It's the most unique asset in the world because everything is transparent and can be checked on-chain. And we are seeing some very strong on-chain patterns of users accumulating Bitcoin rather than selling. Yes, there is institutional demand, but don't forget that huge part of the ETFs are considered to be institutional demand. But at the end, those are people like me and you investing through ETF. Because Hank, like a few minutes ago, you mentioned that a few years ago, you can check S&P 500, and then Bitcoin is going to outperform S&P 500. But as an average retail investor, a few years ago, you were not able to have a trusted centralized partner where you can invest your life savings with them. Because for S&P 500, super simple. You press the button, you go to Fidelity or BlackRock, and then you invest. Now, this is possible with ETFs, with the Bitcoin ETFs. So this is kind of artificial retail also interest. But again, the type of customers that are investing, it's completely different. Those are long-term holders, very wealthy long-term holders. So yeah, different environment, super bullish. Yeah, I'm very excited for the next 4 years.
Yeah. What do you think it's going to take for retail to join in on the party right now? Because it seems like they feel like maybe they're priced out. Does Bitcoin's price need to get so big that even retail can't afford to ignore it right now? Like, are we at that point where we need Bitcoin to be 250, 500K for retail out there that knows of Bitcoin but maybe hasn't been particularly interested in it to be like, oh, wow, this thing is legitimate. I better educate myself because I don't want to miss more than what I already have. Because right now it kind of feels like people think if they can't buy a full Bitcoin, they've missed the boat. But if 0.1 all of a sudden is worth 25 grand, then do you think that is the kind of thing that will bring retail back to the playing field? Or what would you expect to happen in order for retail to seemingly regain their interest in the world's most hard asset?
So Hank, there are only two options for this to happen. First one is the Bitcoin price to skyrocket and actually trigger the retail FOMO, because right now there is institutional FOMO. Institutions are rushing to buy and own Bitcoin. Retail, they're not yet. We know that retail will enter the race if the Bitcoin price appreciates significantly, so they can see opportunity to speculate with the Bitcoin price. As I mentioned, this is not helping really the Bitcoin ecosystem, but definitely can boost the price. Any type of return which is less than 20x, I think the retail is not going to be interested. In simple terms, this is approximately 300,000 per Bitcoin, which can really trigger the retail FOMO. And that's the first option. And then there is a second one, which is much more interested. And now we're talking about the regime change. If people stop recognizing the US dollar as a preferred way, as a safe haven for your assets, or even or potentially gold, and people actually lose the trust in the US dollar, then they need to move their wealth somewhere. And Bitcoin right now is positioned to be the most strategically important asset in the world, which can actually be alternative to the US dollar. Because if you move your wealth to a gold, it's much more complicated to transact, to send your gold internationally. But if you move your wealth to Bitcoin, then you can, with few clicks, even in Zappo Bank, with few clicks, you can pay through Lightning and move your Bitcoin around the world. So it's protecting you from inflation. It's allowing you to move 24/7, and it's still like the most trusted decentralized currency in the world. And this is the other option, which I think can really trigger retail FOMO if something goes wrong with the US dollar. Now, This will also have some other repercussions, which we should not underestimate. But I think if this happens, the Bitcoin price will go way above $1 million because everyone will look for safe haven.
Yeah, no, I think you're right. I think we're going to need, unfortunately, retail is going to need to see and feel some real pain with their purchasing power decreasing over the next months and years as the US dollar continues to be debased. That they're going to be like, well, there's got to be a better way because now my groceries that used to cost $50 are $150. So it's unfortunate because you and I see the writing on the wall. We know this is already happening, but unfortunately everybody kind of has to experience things for themselves sometimes to really have a reason or a catalyst for change and looking at the world differently. So I think you're right. We're going to have to see some big movements probably within government currencies, and people will finally get on board the Bitcoin train if they haven't already. But hey, we'll gladly have them once they decide to hop on board. We take everybody. So, all right, hang tight, Anton. We're going to read this next story. I'm going to bring you back in just a second. So a new Bitcoin price prediction has officially dropped, and no, it doesn't involve laser eyes or Lambos. Unfortunately, I love both of those things. Mitchell Askew, head of research at Blockware, says Bitcoin is headed to $1 million. Heard that before. But he says, don't expect fireworks because the days of parabolic bull runs and brutal bear markets are over. Instead, he says to get ready for slow, steady institutional gains, which is great if you're a pension fund, but less exciting if you bought in at 69K and are still coping. Askew posted his long-term thesis on X, predicting Bitcoin hits $1 million in the next decade. But forget the 2013 or 2017 style blow-off tops. He says it'll be a series of pumps followed by endless consolidations. So basically, watching paint dry, but hey, with volatility. He argues that this new grinded-out cycle will push out short-term speculators, which in theory leaves more room for people who actually know what the heck they're doing. The key turning point, he says, was the launch of the spot Bitcoin ETFs in early 2024. That institutionalization turned Bitcoin into a less chaotic asset class. Since then, the biggest drawdown has been only around 30% or so. Still volatile, but no longer a financial roller coaster with the brakes cut. Askew believes this new stability favors private miners, especially those using bonus depreciation tax perks to write off hardware. He says Blockware's miners are well positioned to profit from Bitcoin's slow climb. He calls this shift logical, not bullish or bearish, just what maturity looks like. No more fairy tale pumps, no more Twitter influencers calling tops, and definitely no more 500x dreams from YouTube thumbnails. Askew warns that expecting $500,000 in 5 months is delusional. And trying to time cycle tops based on halvings is a good way to miss the whole ride. So what's the new game plan then? Well, buy, wait, and maybe just take a nap. Wake up in 2035 with a smile or not. Depends on whether you're still holding. So we're bringing back Anton. Anton, Mitchell Askew says the path to $1 million Bitcoin won't be parabolic. It'll be slow and steady. As someone inside the banking side of crypto, does that thesis line up with what you're seeing from clients and capital flows right now?
Hank, I can claim that the Bitcoin will reach 1 million and bet my life. But what I'm seeing, because I'm following all type of quantitative, qualitative forecasts and models. All type of models are based on historical data, and all type of quantitative models got broken in March 2024 when we hit all-time high before the halving, which was unprecedented. Since then, no one really was able to predict the Bitcoin price in short to medium term. All type of different predictions happened here and there, but all of them were wrong. And now there is a different separate type of predictions. People are saying the Bitcoin will go up forever, which actually is not prediction. That's a fact, because that's how the Bitcoin has been designed, and that's how the Bitcoin is operating. Now, am I seeing people expecting diminishing returns on the Bitcoin after each cycle? Yes, and that's a fact, because right now, Hank, Bitcoin market cap is approximately $2.4 trillion. How we can expect the Bitcoin to reach 1 million? Because this means approximately 9x from here. So we need around 20 trillion in capital inflows to reach this price target of $1 million. It's going to take time. And this will also surpass the gold, because currently the gold is approximately 22 trillion market cap. Can Bitcoin beat gold in terms of market cap? 100%. It's a decentralized, much more trusted, and also with a limited supply. So I personally believe this will happen. But it's very hard to say when exactly this is going to be the exact date. In long term, for sure, should we expect the Bitcoin to reach $1 million next year? Unless we have some dramatic order change, I think the chances are approximately 1%. But that's not bad. That's not bad, because at the end, the Bitcoin is getting more and more traction. It's recognized around the world from top financial institutions, from the US government, and more people started seeing the real value which the Bitcoin is bringing. And they're going to start trusting Bitcoin with their life savings, which is the trigger which was missing in the past few cycles, which I think it's extremely bullish.
Yeah, I totally agree with everything you're saying. At this point, it seems like it's just a matter of not if, but when, right? And something people are forgetting about all the time is we're at this unique inflection point in our parents' generation where we're about to experience one of the greatest wealth transfers, if not the greatest in human history, right? And you're gonna have, our grandparents, our parents, people that didn't grow up with Bitcoin. So I could understand their initial skepticism to this new digital gold, magic internet money, right? But people forget Bitcoin's been around for 15, 16 years. So in 15, 16 years, you're gonna have this whole contingent of the population that has grown up with Bitcoin always being a thing, that they've always known about it. All of a sudden, they're 30. They're receiving wealth from their grandparents, from their parents. Do you think they're gonna be more likely to put it in gold, or the best performing asset of all time that has always been around since they were born, right? And I think that once that starts to hit, it will be a slow, gradual climb, but at this point, it kind of feels inevitable to me. Askew in his piece there also claimed that the days of blow-off tops and savage bear markets are likely behind us. Do you think that's wholly realistic, or is crypto always gonna crypto and be a little crazy sometimes? Because that's kind of part of the nature of the game, being able to trade at a moment's notice and transfer. Do you think we're gonna still see some of those big swings, or are those kind of things of the past?
I think this is part of the crypto magic, to have those serious price swings. But I think before answering this one, extremely important point of your previous question, it's a fact that some millennials and some of the younger generation, when they receive the wealth transfer, they will jump to Bitcoin, and we started seeing this. I can tell you that there are Zapu Bank customers, that are members, that are completely refusing to live on the fiat standard. Those people are rejecting the current financial order, and they are aiming to do everything with Bitcoin. A few years ago, this was not possible, because imagine you want to buy for groceries, imagine you want to buy a car, you had to use fiat. Right now, you have financial institutions, right, like Zapu Bank, which are essentially allowing you to live on the Bitcoin standard by allowing you to pay with Bitcoin, transact Bitcoin internationally. Most importantly, allow your Bitcoin to work for you by giving you interest rate, and also borrow against your Bitcoin. So right now, you can get US dollars without selling your Bitcoin, buy a car, while the Bitcoin price is appreciating over 40% every year on average. So why to sell your Bitcoin when you can borrow against it? And then if the merchant is not accepting Bitcoin, but accept cards, because cards are international, you can use your Zapu Bank debit card, pay directly from your Bitcoin balance, and this is going to work. So this wealth transfer, it's matching perfectly with how institutions and financial institutions, most importantly like Zapu, are prepared to serve those customers, which we already started seeing, which is quite crazy for the Bitcoin overall adoption. And then on your previous,
No, that makes a lot of sense. We're seeing it happen in real time, right? PayPal just came out the other day saying they're supporting like 100 different cryptos. You have Jack Dorsey over at Block, who just, I think, opened up payments to like 4 million people using their already established hardware to use Bitcoin. Like, it's happening in real time. And once we start actually using it as a day-to-day currency where I'm paying you back for lunch in Bitcoin and stuff, it's game over. And we're going to see price hikes like we've never seen before. So everyone better get in while we're still hovering around 100K, because I don't think this is going to be for too long of a time. Things are getting wild. Another interesting point in this story was the launch of Bitcoin ETFs in 2024 was described as a bit of a turning point for Bitcoin, as it made BTC feel more like a stable asset class. Has that changed how institutions or even sovereign clients interact with Bitcoin through Xapo at all?
100%. When you have a Bitcoin ETF being approved and actually available to invest in, the interest in Bitcoin skyrocketed. And we also experienced this on Xapo side simply because we are on the market since 2013. And we were contacted by a lot of institutions, and they were just asking how they can buy Bitcoin, and but most importantly, how they can custody their Bitcoin. And this trend is only accelerating. And as I mentioned earlier, we are right now in a FOMO phase of institutions urging, like trying to buy Bitcoin as soon as possible. And those institutions are not going to sell if the Bitcoin price decreases with 30%. They're not going to panic sell. And this is so strong indicator that the overall Bitcoin ecosystem changed drastically since 2024. And this was a turning point. You correctly said this was a turning point where the Bitcoin right now is recognized internationally, and people trust Bitcoin with their life savings. And those are people who are not going to sell. They're going to keep investing more, and this group of people will only grow because they will attract more and more of their friends, of their family, which is quite good. I would say, at least.
Oh, indeed. Yeah. No, I would agree with that. And if we're really in this new era, right, where bull markets compared to the years past are kind of boring, how do you think that affects the long-term adoption of Bitcoin, especially in emerging markets? People don't see it quite as sexy as it used to. It feels like it's being kind of adopted by a lot of traditional finance, which I think is great for long-term Bitcoin bulls, but clearly it's having an effect on what retail feel or how they feel about Bitcoin. Do you think that's a good thing going forward, these boring bull markets that are a little more predictable and less chaotic, or does that kind of take away some of the sparkle for a lot of retail?
I think I will make probably the most important point since our discussion. Basically, Satoshi envisioned Bitcoin as a pure peer-to-peer electronic cash. Right now, people are very focused on the Bitcoin price. They are a bit greedy, hoping to make good returns. But at the end, Bitcoin is supposed to be the settlement layer for everything. You should be able to move Bitcoin internationally and settle different assets on top of the Bitcoin network. That's how the Bitcoin will become a medium of exchange for everything in the world. And I cannot share a lot, but on Xapo side, we are building heavily. We are envisioning a world where you should be able to transact 24/7 any type of fiat stablecoin or even Bitcoin without having any middleman, and everything should be settled on top of Bitcoin. So once emerging markets and people in the emerging markets have this opportunity to transact, let's say, Singaporean dollar or Philippine dollars internationally, 24/7, much faster, literally instant fiat transactions, they're going to experience the real power of Bitcoin. And that's when the Bitcoin adoption will skyrocket, because I think this is a turning point for retail, for the average retail user to understand that Bitcoin is not just asset to speculate, but actually it's a completely different layer of money, which allows you to settle internationally, and you're allowed to settle of any asset, not only fiat or stable coins, but literally every asset can be settled on top of Bitcoin. And right now, think about you are living in Philippines, you want to send the USD internationally. It's going to take you a few days, and the costs are approximately $40 or 35. With Bitcoin, you can send USD internationally. The costs are going to be 0.01 cent, and the transaction will settle internationally 24/7 without bank holidays, without any delays or middle checks, or literally without any delays. So this is the real power of Bitcoin, but we are a bit early. We are still like spending a lot of time discussing the price, discussing the adoption. But on Zappo side, I can confidently say that we are building and we are envisioning this world, and we are actually trying to build the Satoshi vision for Bitcoin to be like peer-to-peer international payment network.
Yeah. And that's one of the many reasons we love you guys at Zappo. You're building the products that we're going to need for this Bitcoin-centric world that we are all very eagerly anticipating in the not too distant future. And for our audience out there, Anton, that might not be familiar with Zappo until today, and they want to learn more about all the incredible things you are doing for our beautiful orange coin, what's the best place for me to send them to get more info?
You can meet us on Twitter or just zappobank.com, and we're going to be very happy to answer any questions. We are also running Twitter talks right now, so just connect. And,
amazing. Well,
hopefully you're going to enjoy.
Everybody should check that out, and I'm always happy to have you on the show, Anton. As always, it's a pleasure. Thank you so much for your time and expertise and wisdom today. We always love having you, and we can't wait to see you again real soon.
Thank you, Hank. It was a pleasure.
Thank you. Pleasure is all mine. All right, let's get back to the bull run because we still got a lot of stories to cover. This next one, well, the U.S. government has filed a civil complaint to seize 20 Bitcoin. That's a value of approximately $2.4 million. The source, a ransomware group called Chaos, which, to be fair, sounds like a fitting supplier for a strategic Bitcoin reserve if I've ever heard of one. The Bitcoin in question was seized by the Dallas FBI back in April. Authorities allege the BTC was the proceeds of unlawful activity tied to ransomware attacks. So naturally, the feds are looking to keep it. And if successful, those 20.2 coins would join the proposed U.S. strategic Bitcoin reserve, the one created by executive order from President Donald Trump back in March. Because why buy Bitcoin when you can just confiscate it instead? According to blockchain analytics, the U.S. government holds an estimated 198,000 BTC. Not bad for a government that couldn't pass a crypto bill until this year. But as usual, things aren't so simple. An independent journalist on X filed a Freedom of Information request with the Department of Justice. And the response, well, the U.S. Marshals Service only holds around 29,000 Bitcoin. So either someone's lying or the Bitcoin is hiding in more agencies than anyone initially realized. According to analytics at Arkham, other branches of government, including the DOJ and U.S. Attorney's offices, also seize and hold Bitcoin. Arkham says none of the Bitcoin held by the government has moved in the last 4 months. But some claim some of those wallets include Bitcoin that hasn't officially been forfeited yet, which means the U.S. might be holding coins it doesn't legally own. But hey, finders keepers, right? Right. Now, in any case, whether it's forfeited, seized, delegated, or hypothetically held, one thing is very clear. The U.S. is stacking sats. And now it's not just the federal government. According to Bitcoin laws, at least 30 U.S. states have introduced legislation to create their own Bitcoin reserves. Only 3 have passed anything so far, Arizona, Texas, and New Hampshire. The rest stuck in legislative limbo. So yeah, we're still fighting about it, but if the government keeps seizing Bitcoin like this, we might end up with a national stack built entirely out of hacker spoils and criminal forfeitures. The most American Bitcoin story ever told. All right, let's go to our next story here. What do we got? All right, we got to erase those questions, guys. All right, next up, Donald Trump. Well, he's officially a Bitcoiner now, sort of. In a recent White House press conference, Trump said Bitcoin is great for the country and also, coincidentally, great for him. Let's take a peek at this clip really quick here, guys.
Amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country. So I don't care about investing. You know, I have kids and they invest in different things. They do believe in it. But I'm president, and what I did do there is build an industry that's very important. And, you know, if we didn't have it, China would.
There, the Don Juan at it again. He also said that Bitcoin performed better than the stock market recently. No mention of how much Bitcoin Don actually holds. But Trump media, well, they own a lot. At the Bitcoin 2025 conference in Las Vegas this year, the Trump sons joined VP J.D. Vance in calling for crypto-friendly regulation. They even predicted Bitcoin hitting 150 to 175K by 2026. Now, Trump media holds about $2 billion in Bitcoin. It's most of their liquid assets, in fact. That gives Trump's personal stake a bump to $2.3 billion. They've also invested $300 million into crypto derivatives tied to ETFs, blockchain stocks, and convertible bonds. And they're planning a utility token linked to Truth Social. Oh, and his family runs World Liberty Financial, a DeFi firm that made $500 million in a year. Critics say Trump's policies directly benefit his own crypto empire. He says it's all in a trust managed by his sons. So I guess we have nothing to worry about then. In other news, the SEC has delayed its decision on the Truth Social Bitcoin ETF. Again, originally scheduled for August 4th, the decision has now been punted to September 18th. Because apparently reviewing paperwork takes 6 weeks. The ETF is backed by the Trump Media and Technology Group and would list on the New York Stock Exchange ARCA under the SEC's commodity-based trust share framework. Now, if approved, it would be the first crypto ETF directly linked to the business interests of a sitting United States president. So, no pressure. The SEC says the delay is simply to allow more time to evaluate the proposal and any issues raised, which is basically bureaucratic for we're stalling. But hey, in the SEC years, this is actually pretty fast. It took them over a decade to approve a spot Bitcoin ETF the first time. That finally happened back in January of 2024, only 11 years after the first application in 2013. So this is practically a sprint by comparison. The Trump-backed ETF isn't the only one collecting dust. The SEC also delayed decisions on Grayscale's Solana Trust, now pushed back to October 10th. And Canary Capital's proposed Litecoin ETF, which is somehow still a thing. SEC Commissioner Hester Pierce, also known as Crypto Mom, well, she's been trying to set expectations. She recently told Bloomberg that the agency is moving slowly because of ongoing litigation and other considerations. Translation, don't get your hopes up just yet. Meanwhile, Trump's crypto ties continue to raise eyebrows. Back in May, Senators Elizabeth Warren and Jeff Merkley sent a spicy letter to the Office of Government Ethics. It accused a Trump-linked crypto deal involving World Liberty Financial, Binance, and a UAE firm of being a staggering conflict of interests. They warned it could allow Trump and the Witkoff family to profit from foreign corruption. So yeah, the SEC might be dragging its feet for a very good reason. Also worth noting, Trump recently signed the Genius Act into law, giving the U.S. its first clear regulatory framework for stablecoins. And the Trump-appointed head of the FHFA told Fannie Mae and Freddie Mac to start treating unconverted crypto as potentially acceptable mortgage assets. So on one hand, progress. On the other hand, a potential ethics minefield. Either way, the Truth Social ETF is delayed because, of course, it is. Did you think it wouldn't be? You should have. And Anthony Pompliano, better known as the Pomp, professional Bitcoin hype man and CEO of ProCap, went on CNBC and said something that shouldn't shock anyone at this point. He thinks the U.S. government is going to start buying Bitcoin. According to Pomp, Bitcoin has established itself as the king of the market, and is not looking to share the throne with Ethereum, Solana, or any other token that still can't hit a new all-time high. When CNBC host Joe Kernan asked why Ethereum has been getting more inflows lately, Pompliano brushed it off. Let's roll the clip and see what he had to say.
I think that Bitcoin has established itself as the king of the market. I don't think that's going to change anytime soon. And I actually think most of Wall Street's time and attention is on Bitcoin. There are other assets that from time to time start to get some capital flows. But if you look, things like Ethereum, Solana, et cetera, they still haven't set in new all-time highs this summer. And so I think that Bitcoin has kind of broken away. Doesn't mean that some of these other assets maybe in the future can't do that, but Bitcoin definitely continues to dominate the market, both in terms of actual dominance of market cap, but also I think just capital flows and time and attention.
We've been having a lot of people on to talk about stable coins.
Yeah, well, the nice thing about stablecoins is they don't go anywhere other than stay at $1. So, they can grow in market cap size in terms of how many people are using them. But I don't think people really use stablecoins as a comparison to Bitcoin or altcoins where they're looking to try to drive some sort of financial performance.
Now, later in this same interview, when asked what the next major catalyst for Bitcoin's price might be, Pomp, well, he didn't hesitate. He said the U.S. government announcing it's buying Bitcoin for a strategic Bitcoin reserve would be the main dish. Not dessert, not an appetizer, the main event. Because nothing says bullish quite like Uncle Sam stacking sats. He also listed two other triggers that could push the price higher. First, the remaining Wall Street firms still on the fence will finally capitulate and buy in. Second, all those cautiously optimistic investors. They'll turn into optimists, which in Bitcoin terms mean they go from tweeting, watch closely, to rage buying at 150K. So there you have it. According to Pomp, Bitcoin is king. Stablecoins are boring. Ethereum is trying, and the U.S. government will eventually say, we are buying Bitcoin. And that'll be the real fireworks. Let's just hope they don't buy the top. All right, we're taking a break. When we're back, we got more Bull Run and our guest of the day, Jody Flournoy. A lot more coming up on the Blockchain Report. Stay tuned. You won't want to miss it.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Sorry, guys, mic is off. It's a live show. It happens. But we're back with more Bull Run. Our next story, Bitcoin analyst and on-chain metrics wizard Willy Woo, the guy who made you feel clever for citing supply shock charts on Twitter, says that he's out. Not out of ideas, but out of Bitcoin. I sold all of mine, he casually dropped on X this week. When asked why, Woo said he thinks he can do better betting on Bitcoin startups than Bitcoin itself. Because apparently we're in the picks and shovels phase now. He claims it's not the first time he's floated this pivot, but it is the first time he's admitted his wallet is now empty. To be fair, Woo still thinks Bitcoin has up to 50x left in it, but he says a good Bitcoin venture could 100x, maybe 1000x. And sure, they might hold BTC on their balance sheet too, so it's basically the same thing, right? Well, he told the Cointelegraph it just makes sense that smart money would go into Bitcoin infrastructure. Then added, you have to be strategic for the startup to bring you onto the investment cap table. Because apparently making 1000x returns starts with LinkedIn DMs and a cap table begging. Woo said valuations for these companies are typically between $4 and $20 million. And if they moon, maybe you've got yourself a unicorn. That's assuming they don't rug, implode, or pivot to becoming an AI-powered pet food company first. To his credit, Woo has been doing this for quite a while. He says he's been investing in startups long before Bitcoin existed. He cited his early seed round in Exodus back in 2016, calling it the only wallet with decent UX at the time. It raised $4 million, later listed on the New York Stock Exchange for nearly $1 billion, which is a nice story. He also said it used to be that Bitcoin itself outperformed Bitcoin startups. Take Coinbase, for example. If you got in during the 2012 round, Woo says you'd have underperformed BTC by 50% by the time of its IPO in 2021. Because in the early days, Bitcoin was the alpha. But now he thinks the startups might be the winners. Among Woo's current darlings is Debify, a platform where you can borrow fiat against your Bitcoin while still keeping self-custody. Their key tech is a multi-key hardware escrow for all involved parties. He likes it because it promotes self-custody, and also because presumably it's not going to dump all your sats into Luna 2.0. Wu didn't say how much Debify raised in its latest seed round, but he did say it wrapped one up in June of 2024. So the big takeaway here, well, Willy Woo doesn't hold Bitcoin anymore, but he does hold shares in companies that do. And if it all goes south, he'll probably coin a metric all about it. All right, so next up, we are going into our guest of the day. He is one of the most well-connected voices in the Bitcoin media space and a powerhouse behind the scenes in Web3 go-to-market strategy. He's the co-founder of BlockFuel, where he helps cutting-edge founders scale smarter and faster, and he's also the host of The Bitcoin Economy, a breakout show that's already racked up over 1.8 million listeners. With a career spanning startups, sales leadership, and now Bitcoin evangelism, he's bringing both brain power and big vision to the table. Please give a big Blockchain Report welcome to Jody Flournoy, everybody. Welcome to the show, Jody.
Good
Our
morning.
studio audience is thrilled to have you. Yeah, how are you?
Yeah, excited to be here.
Yeah, so are we. Now, I'm sure there's at least a small contingent of our audience, Jody, that's not familiar with you, BlockFuel, and all the work you're doing. Could you just give us a quick summary of what you're up to these days?
We're doing a lot of things. I think we're seeing a lot of the market pick up. We're like analyzing, Bitcoin taking off every day, but it's all about keeping sober, making sure you're not drinking your own Kool-Aid, making sure you're not getting over leveraged. What we're doing right now is honestly focused on 21 rates, launching this week a new beta site for 21rates.com. And the idea is exactly what you were talking with Willy Woo or about Willy Woo. Instead of selling all your Bitcoin, we believe the Bitcoin economy is going to be, the future financial system. And so we want to provide all the tools to say, hey, how can you not sell all your Bitcoin and still be able to, access liquidity, be able to store and self-custody correctly. So yeah, user-driven platform, free for everyone to use. We're going to be rolling it out to beta testers now and welcome any feedback because we want to allow people to control, the future of their financial system.
That's amazing. And if Willy Woo has anything to say about it, it sounds like you guys are on the right path right now, considering where the Bitcoin ecosystem is going. So we're certainly excited to have you here and learn from all of your expertise and wisdom in the space. So what we're going to do next, Jody, I'm going to read this next story. We're going to bring you back and chat about it. Sound good?
Let's go.
Rock and roll. All right, so Robert Kiyosaki's back in the news. You know him as he's best known for Rich Dad, Poor Dad, and of course reminding you that saving money is for suckers. Well, he's weighing in on the whole Bitcoin ETF craze, and surprise, he likes them. Sort of. In a recent post on X, Kiyosaki said he recommends Bitcoin ETFs for average investors, but before you go thinking he's suddenly pro-Wall Street paper products, don't. He made it very clear that ETFs are not the same as holding the real thing. He even compared it to having a picture of a gun for personal defense. There he is. Which this is Kiyosaki speak for. It's helpful, but don't get cocky about it. He believes ETFs are a decent entry point. They're easy to buy, easy to manage, and don't require knowing how to self-custody. So yeah, he recommends them, but only for beginners. You see, for those who know what they're actually doing, he says real gold, silver, and Bitcoin are the moves, along with apparently an actual gun, because according to Kiyosaki, financial and physical security go hand in hand, and nothing screams peace of mind quite like a Glock next to your cold wallet. He also doubled down on his long-running philosophy that fiat is trash, saying, savers are losers, as he reminded followers on X. And he didn't stop there. He blamed the Fed's money printing for everything, from the 1987 crash to the collapse of Silicon Valley Bank. So yeah, he's still very much on brand. Kiyosaki also revealed he plans to buy another Bitcoin, but he's holding off for now. Why, do you ask? Well, because even he's cautious about being greedy at these current prices. He referenced his favorite saying, pigs get fat, hogs get slaughtered, which basically means he doesn't want to get wrecked chasing candles. He said he won't buy more until he sees where the economy is headed. Despite believing Bitcoin could eventually reach $200K or even $1 million, he's deciding to take a pause. Now, for new investors, Kiyosaki suggested starting small, as in start with a Satoshi small, which, to be fair, is still more than what most people have. And for anyone wondering whether now is the right time to jump in, Kiyosaki pointed to Warren Buffett, sitting on a $350 billion pile of cash. He suspects that Buffett is waiting for the next crash, and when it hits, he'll swoop in and buy the best assets at a discount. Or in other words, be like Buffett, unless you're average. Then buy the ETF with a helmet and a picture of a gun, most preferably. All right, we're bringing back Jody. Jody, Kiyosaki says Bitcoin ETFs are training wheels for the average investor. Do you agree with that statement, or do you think they give people a false sense of security?
I think in this cycle, there's a sense of realism that everyone needs to have. I think, I have, parents that are in their 60s and 70s, and the reality is they're not going to be, self-custody experts. And we could spend time, certainly making them so. And I think that they should have exposure to self-custody Bitcoin. But I think for a lot of people out there that maybe don't have the time or education, then ETFs provide a really, really good option that wasn't there before, to where if we look at, I think one of the things that everyone should care about and be looking at, which is the massive wealth transfer that's going to happen from baby boomers and Gen X in the future, into these new generations, certainly like Gen Z and those that don't have a lot of hope on the American dream and owning a house and having the vacations and having the life that they want. You would rather, anyone that's building, family, generational wealth, for them to move their assets out of, fiat denominated stocks and equities into a harder asset like Bitcoin and getting exposure to an ETF, rather than, let's say, the self-custody part scares them and they decide not to invest in the asset class. We recommend now, hey, if that's the way that you're going to get exposure to Bitcoin, then let's jump in and do it now if that's going to make you act. And that's going to make you act with a bigger investment or a bigger exposure of your portfolio than only doing self-custody and only dipping your toes in. So Kiyosaki, not a, haven't read his book, but I have recent stuff I haven't seen, great on, but the more people talking about this, I think is good. And the more people get interested in and actually holding a Bitcoin ETF, they're going to start getting interested in, okay, what's beyond this? Why do people hold, self-custody? Why do they want to have self-sovereignty, which is you get into the rabbit hole and then we go on from there.
Mm-hmm. Yeah, you make some good points. And I like that you brought up the great wealth transfer part. We talked about that a little bit earlier on the show with our guest Anton. Is that people, it's the one thing in the room that's so big and looming over us, but people seem to ignore it. Maybe it's because in kind of the cryptoverse, we've become accustomed to thinking in days and weeks rather than months and years, right? And we're probably still about 10 to 15 years away from that truly taking its full effect, right? Because Bitcoin being 15, 16 years old now, 15 years, you got 30-year-olds who have money from their families who now are like not particularly trustful of fiat. I'm sure it'll be even worse than it is now. And gold is just a little bit of a pain in the arse, right? So they're going to be looking for other options, and Bitcoin will have always been around for them. So yeah, no, and as far as ETFs go, any type of on-ramp that gets people, I think, at least initially into that Bitcoin ecosystem, I think is a good thing. It's kind of like a nice smooth transition rather than having to go right to your own cold storage wallet, in which case my mom and grandmother are never going to figure that out, ever. So yeah, no, I think you made some good points there. And in that story, and also you said you hadn't read Rich Dad Poor Dad yet?
I have not read Rich Dad Poor Dad. I feel like now I'm probably going to take it to ChatGPT and SparkNote it.
I'll save you the trouble. It's real simple. Get assets, stay away from liabilities. That's the entire book. I just summarized it for you. So ChatGPT, I saved you some compute power. But in this story, Kiyosaki draws this sharp line between real Bitcoin and then so-called paper Bitcoin. How important do you think it is for new investors to understand that difference early on in their Bitcoin journey?
I think early on, people have to understand that there is a difference between, you could have a ledger, a centralized ledger in a bank, and you could consider that, paper fiat's maybe not the best example, but just a tally mark on a ledger where there's not physical coins or dollar bills or anything that's tangible. But the difference is that it's FDIC insured. It's backed by the faith and credit of the U.S. government. There's a lot of buffer, if some kind of supply shock or some kind of, massive black swan event were to happen, then there's safeguards in place. The system's been set up so that we're preventing another bank run scenario. I don't think that system's going to last forever. But if you think about that in decentralized ledger, you think about like Bitcoin, you don't have those same protections with any of the exchanges. They do protect your cash that's held on exchange, but the FDIC is very, very clear. Any assets that are held within this centralized exchange, such as Bitcoin, any other altcoins that you have on there, they are not going to be fully insured. If there's a bank run, if it's a FTX like scenario, then the so-called like paper Bitcoin, which is maybe just a tally mark on their sheet, it might not be there, and you may never get your assets. So I think understanding that it doesn't need to be a technical understanding. It just needs to be an understanding that you're trusting someone, and these aren't backed. These don't have all of the things, certainly in the United States, that we take for granted in our banking system of having all these fallbacks, having the government willing to step in and backstop these banks. No one's stepping in to backstop any of these centralized entities. So I think this understanding that basic principle should drive people to want to diversify their assets, start looking into self-custody, multi-institution custody. There's a lot of different inheritance protocols, that allow you not to rely on old school last cycle single sig, but very resilient systems to holding Bitcoin yourself.
Well, that was an incredibly well put answer. Somebody should put you on your own podcast, Jody. That was great. I really appreciate it.
Check it out.
Well put. Yeah. Oh, well, we're going to talk about that in just a bit. Hang tight, Jody. We're going to come back for you in just a sec. We're going to go over this next story quick because Mara, which, in case you forgot, is the largest publicly traded Bitcoin mining company on earth, just raised $950 million. And what are they going to do with that almost $1 billion? I bet they're going to buy more Bitcoin because apparently holding 50,000 BTC just wasn't bullish enough for them. The funding came in the form of interest-free senior convertible notes from private investors. And according to the press release, the money is going toward additional Bitcoin and general corporate purposes, which sounds suspiciously like stacking sats and keeping the lights on. Mara is already the second largest public Bitcoin holder. Only Strategy, with its over 607,000 BTC, holds more than them. But now, with this massive cash injection, Mara might be gunning for the throne. Some people are even calling it a shadow bank, because not only are they hoarding BTC, they're lending it out. In Q1 of 2025 alone, Mara lent over 14,000 Bitcoin to institutions. So instead of selling into the market, they monetize their holdings, because why mine Bitcoin when you can rent it? That's not a mining company, that's a black hole with an invoice system. The notes raised $940.5 million after expenses, and the company explicitly said they'll use the rest for Bitcoin buys and corporate purposes. Or in other words, more stacking, more lending, more power. Now, this is starting to look less like a mining firm and more like a decentralized central bank with an SEC filing. Mara's market cap now stands at just under $6 billion, and with 50,000 BTC already locked and loaded, they're one good sailor meme away from being the new face of Bitcoin corporate strategy. Strategy might have more Bitcoin right now, but Mara has the momentum and a 9-figure pile of dry powder. All right, we're bringing back Jody. Jody, Mara just raised nearly $1 billion to buy more Bitcoin. Are we watching the transformation of a mining company into a Bitcoin native financial institution? What do you think's going on there?
I think it's super interesting. We interviewed Adam Swick, Chief Strategy Officer at Mara. Great guy. You have talked to him several times since. And they're a company that started out way on the other side. They held a bunch of patents. They used to be just a corporation that was almost like a shell company holding patents, and they've evolved and they got into Bitcoin, they got into mining. I think it's very important to point out a lot of the current analysis on these Bitcoin treasury companies. You look at 21 with Jack Mallers, you look at Metaplanet, you look at Strategy, you look at Smarter Web Company in the UK. There's so many, that are coming out, every single week. And we've seen recently that a lot of the valuations, a lot of the prices, a lot of the inflows in these different markets into these companies has really been driven by who is using the most leverage, who is driving up the MNAV, or the multiple on the net asset value of the Bitcoin itself that they're holding, and that is the fastest horse, as people say, and that's the one that's really going to run. So companies with actual businesses and the more substantial the side, main existing business line that they have almost been punished in the stock market on how those are going to perform. So people see a capital intensive business like Marathon on the mining side and haven't treated it like a traditional leveraged Bitcoin equity, or these Bitcoin treasury companies that are raising debt, following the Saylor playbook. So when I see, Marathon, I see them trying to break out of how these, capital intensive companies are being valuated. I do think currently in this cycle, it's smart for them to want to change that narrative. They've been in the space for a while. They've proven themselves being able to adapt and to define new business lines. They recently invested in another podcast guest we had, Alex Bloom from 2 Prime. So 2 Prime is a RIA asset management firm that provides yield on Bitcoin for institutions and accredited investors. So they're finding new ways to do it. They're not just chasing the AI wave of, hey, let's put all these NVIDIA chips to work with AI. But I will say, I will leave with this. I do think that while asset intensive, more legitimate, bigger not side businesses, but core businesses that these leveraged Bitcoin equities have, while they're not sexy now, for say a Metaplanet that just has one hotel, another hotel on the way, I do think in a downturn for Bitcoin, this will provide a cushion. This will provide some of these companies the ability not to just MNAV dropping down below 1, crashing the stock price because people no longer believe in the leveraged Bitcoin equity play.
Mm-hmm. What are your thoughts on this whole Bitcoin corporate treasury phenomenon that we've seen over the last few months? Obviously it started with strategy, and now it's like every day I feel like we're seeing another company start to run a similar playbook. But part of me wonders, is that truly sustainable over time? Not every company has the benefit that MicroStrategy did of buying it back when it was a lot cheaper, right? So they're up 60%, I think, in their all-time Bitcoin holdings. Let's actually get Bitcoin treasuries up here really quick, guys. But you have a lot of other companies that are joining in now, and they're buying at these much higher prices. Is any part of you worried that if we see a significant drop in price, that there's going to be some real trouble for these companies? Because people are going to have to sell. And then if you see one sell, does that start this kind of domino rally effect where others start doing it? And then we have all these sells going on and it gets out of control. Does the whole corporate treasury play, does that concern you at all? Is this really viable long term for companies that aren't necessarily strategy?
I think it's an important distinction to look at is between leveraged Bitcoin equities and companies moving Bitcoin onto their balance sheet and holding as their treasury. I think on the latter, you're looking at, a viable strategy that everyone, not, corporations and individuals should take on is, moving to a hard asset, moving to something that is going to outpace inflation. Money printing is going to continue. Debt is going to continue to rise. So I think that in itself, just on the treasury aspect, makes sense. I think taking it in the big differentiator is leverage. So what you see, and we were at Strategy World in Orlando this year, great conference, amazing, talking to both Phong Lee and Michael Saylor, and, they're very open, they're very transparent in how they communicate. They're operating 96, 97 bulls. They're very, very, very intelligent. They think very thoroughly through Andrew Kang, Sharish Girodi, one of our friends, Julian is there. There's so many people that are, I think, very quality because they've been a business for so long that their level of execution is very high. Not everyone is going to have that level of execution. I think that's a very big point. So point number one, executive leadership is very strong there. They're very they're very holistically minded, not just really on the Bitcoin side, but also on corporate finance, which is a new area for a lot of us, especially at that level, and incorporating Bitcoin into it. So management teams that don't have either that aptitude or they don't have the focus and willingness to dive in, I think they're certainly going to struggle. The MNAVs aren't going to sustain, so they're not going to have multiples like they see now. Those are going to crash. I think the other really big piece people should look at, and not financial advice, but you look at what Michael Saylor's doing and his focus right now, his focus at the Strategy World Conference, his focus at I've seen in other talks since then, has been on getting into his $300 trillion fixed income market, the bond market, looking at corporate bonds and rolling out new products. So Stride, Strife, Stretch was the one that was, just announced. There's all of these particular, Bitcoin-backed convertible bond products, or Stretch is actually, trying to be more like a money market product. And you're getting deep in the corporate finance side, but they are trying to knock on the door of, investment grade, Bitcoin equities or investment grade, Bitcoin corporate debt. And that's not an option for many of these corporations. Once you get outside of, say, the 5 to 10, there has to be an appetite for the preferred stocks, preferred equity issuances. There needs to be an appetite for the convertible bonds. That Strategy, as the first mover and the one with the most Bitcoin by far, is able to take advantage of. And to get those investment grade ratings, it's unlikely that a majority of the smaller companies are going to be able to get those. What that means is, instead of just diluting your stock to be able to buy more Bitcoin, Saylor and team, and we're starting to see this with MetaPlanet on looking at preferred equity, is you're finding ways that aren't directly diluting the stock immediately to be able to buy Bitcoin. That affords you the ability to keep going and keep growing at a pace where the MNAV isn't, going out of control, or, shareholders in the market doesn't feel like it's an overly diluted stock. So that is one concern that I have. It's no knock on Bitcoin. It's that these companies either have a huge lead like Strategy, they have a great management team, and to their credit, they are very transparent with their playbook. So Strategy team want, these other companies to follow at that level of performance. But you can say that you can't perform, like Larry Bird in any amazing team that you've seen, like even the Thunder, offense this year. Like, you can't expect everyone just to have all the pieces in them to work like clockwork. I think people are chasing, the current bull run. They want to dilute as much as possible of their stock, buy Bitcoin, and then are they going to be committed long term? We'll have to watch that, but I would definitely exercise caution on some of the smaller ones.
Yeah, and I think kind of to your point, if this goes south, this isn't a Bitcoin problem. This is a leadership and probably has something to do with over leveraging problem. But we'll see how this plays out, because I get worried that you have it seems like Strategy's underlying business is just such a small portion now compared to what they're doing with Bitcoin. GameStop, same thing. It's kind of a fledgling business model, and they're hoping to kind of prop it up with Bitcoin, and that's great as long as Bitcoin continues this ascent that we've been seeing. But over the history of Bitcoin, that hasn't always been the case. But with that being said, we're kind of entering, it seems like, a new phase of Bitcoin's maturation journey. So maybe we won't see those big swings like we used to, very much because retail is kind of sitting out, and with these institutions, they're looking to buy and hold, and I think they got a little bit more diamond hands than most of the retail traders out there. But there are still a lot of everyday investors that are probably looking at Bitcoin right now as that price continues to increase. And how should everyday investors right now think about participating alongside these giants like MicroStrategy, like Mara? Because it feels like this arena is getting really crowded with institutions. Is there a lot of room left for everyday traders there, or is that kind of risky right now with all this big money in the game?
Yeah. Number one, you don't have to buy a full Bitcoin. It's surprising the amount of people that don't realize that you can buy a fraction of a sat. You need to look at, obviously, don't buy Bitcoin if it's, don't buy a fraction of a cent, like, because of network fees, try to get, a decent amount, like make bigger investments than $10 or $20. But certainly recommend DCAing on the small side. I think as you're looking at, just the different exposure, to these assets. I think one thing that is people don't talk about enough in education and financial education everywhere, but certainly the U.S. is not great, is if you look at the real estate markets, like when can you get 10x leverage on a particular asset that makes income and for everyday person, and then you can borrow against that. So you're looking at commercial real estate. I was a real estate major in college. You go out and buy a building, you can get income immediately from it. You can get 10x leverage on the down payment that you put down. Everyday people do that with their houses every single day. For the next generation, that's not always available. If you have $1 million houses, the average, homes price in your town, do you have, the $200,000 you want to put down or $100,000 you put down? A lot of people don't. And I think this is the way the Gen Z can get exposure to those assets. It's something that allows you to get a hard asset that all of these companies, and I think there's 157 on this list, are all buying. And there's only 21 million. And so as you have this competition, I think that's like if you only had 21 million houses in the entire world, and then you have 8 billion people, wouldn't you want to go buy a house, especially if it's something that, you're able to, there's becoming more products and more things out there that you can borrow against it. You can loan it out and get yield. So I would say it's worth, the upside is worth the exposure. Jump into it early. Everyone that you see retiring now, with the gray wave or, the big wealth transfer, they bought houses, a lot of them early on for $50 and, a couple blueberries. And now they're selling it for $1 million to our generation. And that's taking up all of our net wealth. So what we should do instead is we should be looking at, okay, what is the shift into what the biggest intrinsic value is?
Yeah, no, you make some really good points there. I think that makes a lot of sense. And also, you mentioned something that I thought was interesting about people don't seem to realize they don't need to buy an entire Bitcoin. And on the show, we've talked about unit bias quite a few times. How do we fix that? Because if you look at Bitcoin compared to pretty much most stocks in the market, its returns year over year beat just about everything for the most part, and it's been relatively consistent if you scale back over time. What needs to happen for people to be okay buying 0.1 Bitcoin and not feeling like they need a whole BTC? Do we need the price to be so high that 0.1 is all of a sudden worth 25 grand and people are like, okay, now it's worth it? What's that next phase that retail gets back in? Is it just they need to see a big enough number where it's no longer, it's so big they can't ignore it? Or is it an education thing? How do we do that?
I think it's an education thing. I think part of it is even realizing why you don't want to have really good, unit bias, because then you realize, oh, hey, all these stocks keep splitting. And in some ways you'd rather have the true asset value shown, more directly of, hey, this is something that's gone 10x, I've gone through an Amazon stock split or Apple stock split. And there's reasons for that, but it's also very helpful just to see, hey, this has gone 10x in the past 5 years. Consider that when you think about buying something. Bitcoin isn't going through one of these stock splits, so you're transparently seeing the growth that it's had. I think that ETFs are going to change that, certainly for new entrants. People should understand, hey, these particular ETF prices, they're set by the issuer. When the ETFs were launched, but you really think about percentage of your portfolio. And if you think about it that way, most people have no idea how many SPY shares they own. If they own exposure in their portfolio to the S&P 500, they don't really know how many maybe Tesla shares after they buy it. It's more hey, I want to get the 10% exposure to that. So I think that's a really good point of there is unit bias, but people need to start thinking of it as just exposure to their overall portfolio. And as we see ETFs coming in at, 50 or IBITs at like 60 something, I believe now, that is another piece that is going to be, is going to help, I think, with a unit bias. The other thing I'll say is, this cycle we're starting to see, also not financial advice, but we're starting to see people, instead of looking at altcoins to get the leverage, a lot of really smart people we were talking to earlier saying, look, altcoins of this cycle are either going to be treasury companies, which you see on the screen now, and then recently with things getting overvalued, IBIT options. So looking at, hey, don't chase anything short, but if you look next year, next March, next January, next summer, and you believe in Bitcoin, then so are a lot of institutions, and you can go out and get IBIT options to get that same leverage and get that same price appreciation that you would want with, say, an altcoin that's ripping. But it's actually like a much more vetted and transparent product that actually has a use case. It's built on, it's, an ETF product. So not recommending options to beginners, but I think for the intermediate and more advanced, investors that are new to Bitcoin, instead of chasing altcoin gains, you could immediately get rugged. You could lose everything. You could round trip any profit you've made this year. Go look just like the institutions are on the options products on some of these ETFs, and something like IBIT has a lot more liquidity, and I think it's driving a lot of the price action right now.
Yeah, no, undoubtedly. I mean, I think IBIT it's the fastest growing ETF of all time. I think, right? It's out of control, and it doesn't seem like it's stopping anytime soon. As long as these corporations keep buying, like price go uppy seems to be canon at this point. All right, Jody. Well, we're going to take a quick break. When we're back, we're going to go into a deep dive with you, learn about your background, all the amazing things you guys are doing over at BlockFuel. So stay put. We'll be right back with more Blockchain Report right after this. All right, and we're back with Jody Flournoy at BlockFuel. Jody, we're going to dive in a little bit. We're going to do a deep dive into your background. I know all of our audience is curious. One question I always like to start with is I want you to take us back. What was your first exposure to Bitcoin like, and how did it eventually turn into a full-blown career pivot for you? What was that journey like?
Yeah, 2013, someone was talking about Bitcoin. It was $100. I was like, oh, ship sailed, it's ran. I did not jump on board. I was not a seasoned investor. Growing up in Georgia and Alabama, I would not say, we had a sophisticated investing like upbringing, but very much like, I think a lot of similarities growing up as working in real estate, being a real estate major, University of Georgia, is these hard assets, looking at long-term investing. That has started to lead me into, seeing Bitcoin as that type of asset. That's why I really like the housing comparison when people think about the investment. So for me, working in different startups, not buying Bitcoin in 2013 like I should. Eventually in 2017, the next cycle, that is when I, really got interested in it. I certainly have been someone that over time has developed a big mistrust of both political parties. I think we've seen a lot of division in the past couple of years. And really, I think there's been a lack of trust on both sides. And I think for very, very valid reasons. So people are looking for ways to really break out of that, two-party cycle, especially like elites on both sides that are, accredited investors able to get these massive, crazy returns, as well as, generational differences of, Gen Z, even younger than I am, being able to afford the American dream, to afford a house, to be able to have hope for the future. A lot of these things just over time compounded. And, as I started buying a little bit, and I was, be honest, I didn't have a ton of money in 2017. So don't come knocking on my house expecting me to be a massive whale like you talked about Willy Woo at the beginning, but just being slow and steady, growing. And then as a career, I'm just very interested in it. I think empowering people to be able to, get out of, the cycle of debt, keeping up with inflation. And that's the thing that most people don't have in the lower to middle classes is the ability to, make the kind of returns and be an active investor to try to keep up with inflation. That's something, only I'd say like the middle class, upper middle class to wealthy can figure out ways as asset owners, as home owners to be able to keep pace with inflation. Most people don't. Most people, are maybe investing a little on the side here and there, and they feel good with a return they make one year, but it's not something they're able to keep pace with. So that's why I'm passionate about it now.
Yeah, and that brings us, great segue, to Block Fuel, which I would love to talk about. How did that start? What was the elevator pitch? And what makes you guys different from other GTM consultancies that are already out there as well?
Yeah, so it's honestly interesting or peculiar story. So as someone who is talking about how I got into the space and diving in, it was 2021 or 2022. I had a friend working over on the sales side at this company called Prime Trust. It's a custodian. And I was like, hey, I really wanted to work in the space. I really want to learn about it. I left a job in payments data security that was cushy in San Francisco and had really built a good career there. But it's like, hey, I'm way more passionate about this. Turns out horrible management of certain keys, of how they hold assets. And the custodian, for those that are new to the space, custodians holding assets, typically an exchange works with a custodian, or let's say with the ETFs, a lot of them are using Coinbase custody as their custodian. There's separation of powers essentially. So you buy on the exchange, you hold on custodian. As a custodian at that point, they basically, management team, lost the keys to a multi-sig wallet that had, I think, 85 million in Ethereum sitting on it. And it's still sitting there on chain. It's pretty fascinating. But there's 83 million or 90 million at this point, maybe close to 100 million just sitting on chain, which is validating that blockchain works. You can tell if someone's lying to you, if they stole the money or not. But that led us to see, hey, a lot of customers got hurt by that, just like in FTX. And we got hurt by that as employees, not knowing that key management practice and any of the cover about afterwards was valid. So we developed a passion for hey, I'm not going back to go work for someone and make a C-suite rich where they're at the detriment of any of our customers. Want to go out and do a lot on the media side, educating, but then also helping companies doing the right things to be able to grow faster. Our focus now, very clearly, is from that Bitcoin financial services side. The platform and the product we're rolling out this week in a beta format is 21rates.com. So this is our baby. This is our focus this week. It's going to have bugs. It's going to have kinks. Come talk to us. Tell us. We're building in public because we do want it to be very, very user driven. And when I say Bitcoin financial services, as we believe the economy of being built on Bitcoin, as Bitcoin becoming this hard asset, just like gold, that people use to store value, use to store generational wealth. There's a whole lot of things that you're going to want to do with it. You're not going to want to just hold it there in your bank account. You're going to want to loan against it. It's just like a house and how you have a lot of your personal net worth tied up in your house. Well, let's say you want to make an addition. You want to get a home equity line of credit. Well, there's a lot of really good Bitcoin lenders out there that, provide services where you go park your Bitcoin with them. You can get a loan, 50% LTV or, a variety of different, loan structures. And then you're able to go in and, get that liquidity without selling your Bitcoin. So as it goes up, as Saylor says, 20%, 30% per year, you're still getting that appreciation on it. We're not suggesting everyone go out and loan their Bitcoin or borrow against their Bitcoin or take out, go get a Bitcoin credit card or, put their money on exchanges. What we want that you should have the information. We see it as a nerd wallet for Bitcoin of saying, hey, let's provide objective third-party information. There's a lot of good providers out there that, focused on, how do you buy Bitcoin? How do you, custody it? And we want to provide good objective information for that.
Yeah. And that brings me to my next question. What's interesting about San Francisco, right? We have all these technical founders, and you had experience with that when you were working, I think, here yourself, but they often seem to struggle with messaging and market fit. If just driving here to our studio every day, there's all those billboards as you go to San Francisco for different tech companies. I don't know who the hell they think they're marketing to, but they're just the worst. And I don't understand what they're thinking with these. And they need companies like you to help them get that proper messaging and marketing fit. How do you help technical founders bridge that gap over at BlockFuel?
Yeah. So when I was living there, you got ads, like so many ads, like ClickUp, and I still haven't used it, but now I almost feel like I have to go use the app ClickUp because I see billboards on like you're riding the Caltrain every day, down to like South San Francisco, Burlingame, where I was working. And there's so many examples of just being inundated, but I had no idea what it was. And some of them were very like developer focused. I think just as we talked about before of educating people, you don't need a whole coin. There's other aspects of how, let's say, the lending market has changed. So when we talk to people about, hey, how do you change, your story? How do you educate people? Some of the lenders we work with, like Ledden, good partner of ours, we've talked to people that we're not partnered with, like Arch Lending, great guys over there, had them on the podcast. And what we want to really differentiate for the users is you had, just like FTX, BlockFi, Celsius, Genesis, all of these companies that were basically taking in the Bitcoin, taking in any of the assets that you were giving them as collateral, and then rehypothecating those, going out and trying to find a bigger yield, bigger return. And that was what really wrecked many of these companies. You saw Alex Mashinsky get indicted and thrown in prison because he was lying to investors. He lost a lot of money with Celsius. These companies now, a lot of them are learning from that. They're not rehypothecating. They're looking at ways to provide proof of reserves. And so for our approach, specifically for how we help them on the market side, is we want to go out and ask them, like, hey, like, we're going to ask you the same questions as every other lender, as every other provider, provide the best data possible. And we want to present you guys well, but like in an accurate way where we're not showing our users anything that's, been driven like any other top 25 credit card or top 5 credit cards that you see now. Those are all paid. And people have, the consumer is getting wise to that now. So we don't manipulate tables. We vet all data personally, but we do think that we've seen no other place out there that like has a lot of the details of like, oh, you're implementing proof of reserves. Let's make that known. Let's make that public. Oh, you're not rehypothecating. You're actually storing with a custodian like a BitGo or Anchorage that's qualified, that's regulated, that has insurance. Great. Let's tell people about that. Let's show people these are the partners that you're investing in to make sure that we're not repeating, the BlockFi, the Celsius, the Genesis of life cycle.
Mm-hmm. I'd be curious to know, in your recent experiences, are there any like client success stories that come to mind that you'd be able to share with us? I mean, I think I read something that you mentioned in a previous interview, or it was a story I read about you saying Bitcoin founders don't really know how to sell. What is there a situation that you can remember where you helped a Bitcoin founder do that through BlockFuel and all the things you guys are doing over there? Is there anything that comes to mind specifically?
Yeah, so I think the really big thing right now is, Bitcoin doesn't have a marketing team. My mom hit me up the other day asking about Ripple. And I'm like, why are they serving my like 60-year-old mother, Ripple ads? But it's true. Like the people are hammering the Facebook ads, and that's how a lot of these like altcoin companies are growing. It's hard to attract people to Bitcoin when altcoins are pumping and people are seeing these gains. But that's a carousel that doesn't last forever and falls apart. And we really want people to protect that. So what we're seeing is the best thing is being able to tell a story, trying to find better storytelling of why Bitcoin at the base, but then also why, hey, here's this financial service on top of it. Here's how it relates to something you already are are aware of. Had a great chat with Joe Consorti over at Horizon, which is basically a platform for allowing equity participation in your home. So they take a portion of your equity, but they give you liquidity to be able to go spend on life events or to buy, Bitcoin directly. So there's these platforms that you really have to go look at, like the existing markets and show people a little bit of like how this works, because I do think people need that vetting of like, okay, here's a home equity line of credit. It's already a product that exists. How can I make that comparison, but switching Bitcoin as the underlying asset versus the home? I think that's something that resonates with people from all different markets, all different walks of life, is just seeing, hey, my aunt took out a HELOC. Okay, that's like a valid, way to do it. This doesn't feel like a payday loan where I'm paying 25% to a loan shark. It's actually a verified, financial product. Okay, now how do I pick a partner on the Bitcoin side with this stack and that I've been, hodling, been DCAing into, that I can trust that is going to protect that stack? So I think it's part of that journey of establishing a connection with, a TradFi or, existing financial product, building trust after, and then you're going to have to educate, on Bitcoin along the way, and any gaps that they have. Typically, someone jumping in, and looking at this is going to have some understanding of Bitcoin, but that's where we want to come in, is educate. Hey, this is all the ways you should do your own research, do due diligence on financial products built on Bitcoin, not just Bitcoin itself.
Right. I think you and I can both agree that education is one of the most paramount things for continued Bitcoin adoption as we go further down the Bitcoin maturation process. I want to talk about 21 rates really quick. That is an educational endeavor to an extent, right? Could you give our audience a little bit more insight as to what that's about, what they can be expecting when they go check it out online?
Yeah, exactly. It's an educational site. We've gone through and built it, ourselves. We've gone through and vetted all of the data personally, which has been a grind to be able to vet all these providers. And the idea here is, as someone, invests in Bitcoin, we don't want to suggest or recommend, hey, you have to go immediately put this Bitcoin to work. But we know that if the economy is being built on Bitcoin, people are going to put their Bitcoin to work. That's going to be, the part of like, any asset underpinning a system, is that people need yield to be able to either, afford different expenses in their lifestyle or to compete with other investments. So what we've basically broken down is a lot of the stuff that we've known from our experience directly, as well as, through our podcast and talking to people around the Bitcoin economy, is, hey, where do you go buy Bitcoin? What's the best exchange? Hey, what, custodians are best to use to protect Bitcoin? What licensing do they have? And then there's a learning center, which goes into Bitcoin 101. You look at like the Bitcoin lending history. A lot of the treasury company stuff. I was working on that last night at 12:30 a.m. is making sure a lot of like the data here is completely accurate, and that we're calculating MNAVs and we're calculating the right like the right like enterprise value, which we use in the MNAV calculation. And this is going to continue to build out. We want to be really the nerd wallet for Bitcoin, completely objective. And then I personally, I want to see, if I have a position in MicroStrategy, if I've Metaplanet, any of these treasury companies, sometimes I want to see that right next to an IBIT position, next to, hey, let's put in like self-custody Bitcoin. So allowing you to see your overall exposure to the Bitcoin space. And then, people are going to adjust these portfolios where it's like, oh, I want something a little more leveraged or risky. Great. I can do some options on these particular Bitcoin products. Or I need to take a loan and get liquidity now. My kid's going to college. Okay, let's put that in the stack and have that as a liability. So you have an overall, good picture, because you don't have credit scores in Bitcoin. Don't think you really need them either. Like, you should be looking at just the hard asset itself, using on-chain data and not using Equifax or Experian or TransUnion, any of these companies that could lose your data. So that our vision is empowering people with the right information. And, full transparency, the way we make money is the same way that NerdWallet was. If you click on, say, provider and you start, exchanging with them or using that, then we get an affiliate code. So similar to Amazon or like a YouTube channel where you get like a small percentage. So we think it's going to be certainly a slow grind on the revenue side, but it should provide value right away for consumers comparing products.
Yeah, and I'm all about any value anybody can bring with real, factual information that helps people ingratiate themselves further into the Bitcoin space, especially if they're newbies. So you guys are doing God's work out there. We certainly appreciate it. We got to wrap up here, Jody. Before we go, though, if anybody out there is looking to upgrade their messaging and marketing game or learn more about Bitcoin, what are the places that we should be sending them so they can get access to all of your great information?
Yeah, 21rates.com. Check out the site, give us feedback. We're working through, any bugs, but that's why it's a beta. It's jumping in, giving people early access and letting users really decide what they want. What is the most accurate info? Also driving reviews. We want people to tell others about their experience and say, hey, like I use this, hardware wallet. I use this lender. This is my experience with them. So we're encouraging that. Beyond that, the Bitcoin Economy is our podcast. We're focused on this level of, treasury companies, lending, custody, exchanges, people that have, BTC sessions. There's a lot of really good people that are starting Bitcoin basics and beginners and getting them set up. And we totally respect that. We want to focus on our, next tranche of, okay, hey, how do you put your Bitcoin to work outside of that? And looking at a lot of these treasury companies, we're really good friends with, like, the MSTR True North guys. They do a really good job on deep analysis on MicroStrategy. So also helping people find experts. So start following us at Bitcoin Economy and then contact us at info@21rates.com. And, happy to help out, happy to discuss, or just give us feedback that some numbers are wrong and we should fix them. And we'll jump on that ASAP.
I love that. Well, Jody, I got to thank you so much for your time, your insight, and your expertise today. It's been an absolute blast having you on the show. Once 21 Rates is officially up and running and you got some reviews, you got to come back on so we can chat more about it because I'm excited to check it out myself. So that's it for today's show. Jody, thank you so much for joining us. And everybody at home, thank you for watching another episode of the Blockchain Report. We'll be back tomorrow, same time and place for more Bitcoin Bedlam. We'll see you then.
Awesome. Thank you.